All right, so you've been dreaming about moving to Tampa or maybe just upgrading your current home, but you're stuck on the big question. How much money do I actually need to buy a house right now? Well, I'll tell you this, it's probably not what your cousin's best friend's coworker told you at the barbecue last weekend. Try saying that twice as fast. Because when it comes to buying a home in Tampa today, there are a lot of half-truths out there, and today we are going to clear them up. If we haven't met yet, my name is Juan, Alcalá, and a little over 6 years ago, my wife Kate and I moved our family of 5 from Detroit, Michigan to the Tampa Bay area, where honestly we didn't know a soul, we just knew we wanted sunshine, community, and an overall better lifestyle. Since then, we've helped over 100 families do the same, buying homes all across the entire Tampa Bay region, and I've seen the real numbers behind what it takes to buy here. So today, I'm pulling back the curtain to show you exactly what to expect and how to make it happen even if you feel stuck right now. All right, first things first, what does the average home cost in Tampa Bay right now? As of last month, the median home sales price in Tampa was right around $436,000, according to Zillow. Now that's not starter home cheap, but that's also not luxury here in Tampa either. Now here's the myth that I have heard so many times that needs to be dispelled. You don't need 20% down to buy a home. Is it wise? Well, it might be for your situation, but this myth stops a lot of buyers before they ever even start. In reality, we see clients get into homes with as little as 3 to 5% down, depending on their loan type. So no, you don't need 80 grand sitting in a bank account to start house hunting in Tampa Bay. But let's break down the numbers. On a $436,000 home, if you were to put 3% down, which is the lowest that I typically see, that's gonna be $13,080. If you did 5% down, that's $21,800. If you did 20% down, that would be $87,200. And that's only required if you wanna skip the PMI, or what's known as private mortgage insurance. Now, that's a whole nother conversation. Sometimes you need the PMI because you don't have the 20%, and that's part of the carrying cost, but you are able to refinance in the future. If you have a conventional loan, you can have an appraisal done in the future as well and have that PMI removed once you have at least 20% equity in that home. If you're buying your second home or upgrading, your equity might already cover most of that, but this is something you gotta look at individually. Now, what about monthly payments? And the reason that I bring this up is because I have found in my experience in 14 years of selling real estate now, that most people buy homes based upon the monthly payment, not the purchase price. Now, I know I'm saying something that may sound controversial, but let me break it down this way, okay? If you're paying cash for a home, then you are purely going to be fixated on price because you're not going to be paying some bank or some person, you're not going to pay them back every single month for the next 20 years, 30 years, whatever that number is going to be for you. But if you buy a home the way that most people do, you're focused on your monthly payment. And that's where things really start to come together. Because even if you can swing the down payment, you still need to be able to afford the monthly payment. Now let's assume you're buying a $450,000 home. You're gonna put 5% down. That's roughly $22,500 up front. Now your loan amount on that property would be $427,500. At an interest rate of 6.75%, your monthly mortgage payment before taxes and insurance, which you are gonna get into, will be around $2,775 a month, which is not a small number. Now you've gotta add things like property taxes, and depending on where you live. Now here in the Tampa Bay area, what I tell people is that property taxes usually land somewhere between 1.4% and 1.8% of the total assessed value. And assessed values here run very similar to the actual value of the property. But let's just give a breakdown here. And we're gonna use some generalizations. It totally depends on where you live. So let's dial in those property taxes. And I wanna give a very conservative scenario, meaning basically worst case. If you buy a $450,000 home, which is what our example is here, and you multiply that times 1.8%. That's gonna give you approximately $8,100 in property taxes annually. Now, again, that is a high number in terms of, I'm using the worst case scenario. I want you to think about that. There are homestead exemptions which can lower that as well, but I wanna go with the worst case scenario. If we break that up into a monthly payment, that adds another $675 a month, depending on where you live again. This can be as little as 1.4%, like I said. Homeowners insurance, something else that can vary wildly depending on what type of property you buy, where it's located. If you buy a new construction home out in Wesley Chapel or Riverview in a non-flood, non-evacuation zone, which almost all of them are, we're seeing insurance payments around $1,200 to $1,500 annually. annually. So you're talking an additional $100 a month. But if you want to live near the coast in a flood zone, it can go $7,000, $8,000, $10,000. Some homes on the water are literally uninsurable. So this is something you need to keep in mind. Again, targeting homes that are in non-flood, non-evacuation zone, and up to today's construction standards will definitely put you in the best possible position. So keep those in mind. Now, getting back to that PMI or private mortgage insurance, remember, this is something that you have to pay if you don't have at least 20% equity or skin in the game when you buy a home. And that'll be approximately $125 to $225 depending on the actual loan amount. But going back to this 450 number, we're gonna be somewhere around in that range. Probably about $225, just for an example there. Now, what's the total monthly expense? Remember, we started with a mortgage payment of $2,775. We'd added another $675 on top of that. Then we added the homeowner's insurance, and that's gonna get us somewhere between $3,700 and $4,000, depending on where you live. And I know we're getting into the weeds on numbers here, but these are questions that people ask all the time, and I really wanna help you break it down. And the biggest thing to remember here is not all the Tampa suburbs are priced the same. What you pay in Lutz is very different from what you're gonna pay in West Chase or South Tampa, as an example. And speaking of location, let's talk about where you're buying. Here's a quick snapshot. Wesley Chapel, new construction, great schools, lots of amenities. The median sales price is right around $460,000. It's perfect for families looking for modern homes in that just moved in feel. West Chase, I would consider very walkable. It's community driven, top rated schools, and the median price is right around $525,000. If you head over the master plan community in Fishhawk, that's family first, loaded with amenities as well. Those prices are around $530,000. That one feels like a private village, ideal if schools and safety are your top priorities. Worth taking a look at for sure. And every zip code is gonna have its own personality and its own price tag. What matters is finding the one that fits your story and what your ideal lifestyle is. I mean, I live close to the coast here. Our average prices, we get 1,000 square foot less where I live because we're close to the water. For the same amount of money you can get out in Wesley Chapel. We're paying almost West Chase prices for a home that's right around 1,800 square feet. So these things, they vary wildly, like I said, and it's really gonna depend on what your ideal lifestyle looks like. You want to match up the correct community. That's what's going to make it feel like home. But what about those hidden costs that, catch a lot of people off guard? And here's the part that a lot of agents skip, and most certainly when you walk into builders' offices. This is something you got to guard yourself against. Even once you've got the down payment and the monthly budget dialed in, there are a few surprise costs that you want to plan for. Number one is the closing cost. This is typically going to be somewhere between 2 and 3% of the total purchase price, usually another $8,000 to $12,000 in our scenario that we're talking about now. The inspections and appraisals, a great inspection that would include sewer scopes, pest, all the things you need, your 4-point inspection, that's gonna cost you somewhere between $700 and $1,100 on average. Then you have an appraisal, which can be, again, very similar in terms of cost. I've seen them as low as $700 before too. It just depends on what type of property it is. Then you've got moving cost, and the average for in-state is around $2,500 if you're gonna be local. That's probably 35 to 50 miles. If you're moving from out of state, that number can vary wildly as well, so keep that in mind. Now, the homeowner's insurance and flood insurance, like we talked about, this is all over the board. My personal residence here, I was sharing with you guys before, I'm about 1.25 miles away from the Gulf of America, and our homeowner's insurance is right around $3,400. I added a flood policy this year, and that was $450 because I'm in a non-flood, non-evacuation zone. But if you followed my journey, we got wet from last year's storms, which are crazy. We're not supposed to. I'm 43 feet above sea level, but that doesn't matter when your neighbors are higher than you. So this is something you got to keep in mind. And we found a very unique way to work with our clients. That way they don't get surprised by insurance cost after writing an offer. And if you're considering making a move here, don't hesitate to reach out to me and my team. As a matter of fact, all of my contact information is listed down below in the description there. You'll even find a link to my calendar so we can hop on Zoom. I'll open up Google Maps and show you all around the Tampa Bay area, especially communities that match your ideal lifestyle. So don't hesitate to take me up on that. So what should you actually do next? Now, here's the honest truth. You don't need a perfect credit score, but there are minimum requirements. You can get a FHA loan with a minimum credit score of right around 580. Now, I'm not recommending that's the most ideal situation. Obviously, the higher the credit score, the better you're going to have in terms of interest rate opportunities to you. But If you're looking to get in a home and stop paying rent, maybe that is a good time. You have to look at your own situation. You definitely don't need to have 6 figures in the bank, but you are going to need to make somewhere around 6 figures as a household to be able to afford a home that's over $400,000. And that's the median price point right now, so keep that in mind also. And you definitely don't need to do this alone. So here's what I recommend. Reach out to us. Book one of those Zoom calls that I offered up earlier. If you're moving to a different area and you want to be connected with a great real estate agent, reach out to me. We have people that move all over the state and we connect them with great agents. If you already know an agent that you know, love, and trust in the area that you're moving to, reach out to them. The next thing I would do is talk to a lender. Make sure that even if you're 6 to 12 months out, you're starting to get a clear picture on what it's going to take for you to make this move a reality. Map out your priorities, school zones, commutes, yard, walkability, and get a crystal clear picture on your budget. And if you're moving with your family or spouse, make sure that you guys are on the same page. Just because a bank is willing to loan you a certain number doesn't mean that you're comfortable paying for that every single month. And that's something you definitely want to take into account when you're trying to make an actual move. And my last tip here is make sure you start your search intentionally. Don't just scroll Zillow or Realtor.com randomly. Make sure that you're focused and strategic. That way you can get the win that you're looking for. Because in this market, the people who win aren't always the ones who offer the most money to the home sellers. They're usually the ones who are the most prepared. And the reality is, buying a home in Tampa right now is 100% doable. And there's a lot of great real estate on sale. Our prices are down roughly 5% year over year. We've got a lot of new construction in the area, and that's continuing to put downward pressure on pricing. Will it hold? I don't know. Affordability is a huge issue. Migration has slowed down. We still had 10,000 people move to this city last year, but there were 35,000 that moved the year before. So all of these things are affecting what is happening in the housing industry, and it gives a lot of options for you as a home buyer. So if this video helped clarify your next steps, make sure you hit the like button. Feel free to drop any questions you have in the comments and subscribe so you don't miss our next video. And if you are ready to talk about the neighborhoods, pricing, or you just want to see if buying a home in Tampa Bay makes sense for you right now, there's a link in the description like I said before, and feel free to book that Zoom call. You're gonna get right to my personal calendar so you'll have access to me. YouTube's gonna put 2 more videos up here that I know will help your journey, and if you have any other questions, don't hesitate to reach out to me and the team, and until next time, go out and live that Tampa life.